think, act, and prosper. You are now tuned into the Money Level Show.
Hey, Rick, Ben, it's good to see you all.
Pleasure to be with you. I hope you'll excuse the informality of my attire today. I'm away from my own conference and in much more casual clothes.
Yeah, sometimes you got to relax and let your hair down, you know?
I have no hair to let down, but thank you.
How you doing, Ben?
Very well, thank you, sir. Pleasure to be on with you two fine gentlemen.
Yeah. So for those who don't know, I mean, Rick has been on the channel multiple times, and so it's almost to the point where you don't need an introduction anymore, Rick. So it's a common occurrence.
Well, thank you for the opportunity to speak to your audience. I enjoy it.
Yes. So today we wanted to jump into some uranium companies. Recently, I had an interview with Sean Wade of Power Metal Resources, and he's a pretty genuine guy, like I feel like, from my talks with him and just like his background and raising capital for exploration companies and such. And Power Metal Resources, they do have a uranium project going on in the Athabasca, I think I said that right, Athabasca Basin. Yeah, I really enjoy how they look to get capital from other sources rather than charging their shareholders to raise capital for some of these projects. And I kind of wanted to get what intrigued you to allow them at the symposium. I mean, you do a lot of vetting of these companies, and you don't bring in any scams or and such. And so I wanted to kind of get your take on Power Metal Resources.
Well, there's a simple vet, Daryl. I have to own it in my portfolio or in the portfolio of partnerships and institutional accounts that I manage. There's no guarantee, unfortunately, that if I buy a stock, it goes up. I'm past expecting that. But there is a guarantee that the process is honest. If I'm not willing to spend my own money, I'm not willing to show it to my exhibitors. Power Metals is involved in public company formation, a business that I was in myself for 25 years. I no longer have any particular interest at age 70 in working 80 hours a week. And doing that requires an absolutely exhausting work schedule. Sean, a former investment banker in natural resources, is still young enough and hungry enough that he's willing to do that. The consequence, since I know it's a very good business, it has benefited me mightily. The consequence is that I will now engage in that process by backing him and others who are doing it. I know it to be a good, if high-risk business. And I have watched him long enough to know that he has attracted the attention of some of the mining and metals focused investment banks that will allow him at least in the front door so that he can bring projects to them and raise money for those projects, as you suggest, off balance sheet, giving his shareholders the ability to benefit from his intellectual capital rather than from their own physical capital, a better bargain in most cases.
Yeah, definitely. And he was honest, about just the nature of if like, we're going into recession or whatnot. And so I just had a question, for you. Well, actually, I think Ben mentioned that when, exploration companies have to raise money, in the midst of like financial or economic uncertainty and such. Ben, you had it worded a little bit better, but I wanted to pass it over to you. Let me pass you the rock real quick.
Certainly, I didn't want to be rude enough to interrupt you while you're hosting, but my question is, as I look out into a rising interest rate environment, capital or liquidity supposedly tightening, and those companies either exploring or developing and wanting to get into production without diluting the hell out of their shareholders, what are you seeing? I know you play a lot in the private placement and financing game. Have you had companies come to you more so recently, looking for some of this capital to get to the next stage of either their exploration or production?
The answer to the question as asked is yes, which is to say that I've been fairly public about the fact that I'm eagerly writing checks now, which makes me, in a sense, that rare piece of fresh meat available in Canada and Australia. The problem is that most of what I've seen isn't investable, which is to say that the quality of the product on offer in most cases hasn't been enough to have my greed overwhelm my fear. It is worthy to note that despite the protests of the issuers that there's no cash available, there's lots of cash available for people who have been successful in the past and treated their shareholders and investors honestly in the past, and or those people with high quality products. I would say, as an example, that construction finance, debt finance, project finance for non-investment grade, single project, sole risk companies is the most plentiful that it's ever been. I would suggest to you that that sector is actually over-capitalized. I've been in that sector for 30 years. 30 years ago, the sector had two players, Rick Rule and Ned Goodman, and they acted in concert. Now, there are probably 12 or 15 players. There's probably $20 billion in the space. The issuers are suggesting that capital is tight because they don't like the interest rate they're forced to pay. But the capital is, of course, available. There are other parts of the capital stack that are available too. The royalty and streaming companies understand that cash flow generated as a royalty or cash flow generated as a stream, particularly commodity-specific streams in precious metals, are valued higher in the market than producing precious metals companies. The consequence of that is that a streaming company, as an example, can provide capital in the capital stack at a lower cost of capital than either debt or equity. And there is probably $7 or $8 billion available on the sidelines for non-investment grade construction project finance from the streaming community. So the suggestion that capital is broadly unavailable is wrong. It's broadly unavailable to the lame, the halt, and the blind, which unfortunately constitutes probably 85% of the public issuers out there.
Yeah, that's some good information, man. Man, you always blowing people's mind when you come on here, man.
Well, the issuers aren't happy to hear that. And in fact, Daryl, one of the reasons why I come on your channel so often is it's important to help young investors, people that are newer to the natural resource business, avoid the mistakes that I made for the first 6 or 7 years that I was in the sector. Believe me, there's not many mistakes that could be made that I didn't make. And there's no particular need for people of your generation to repeat my stupidity.
Man, yeah, definitely. Greatly appreciated. So Ben and I, we recently did a stock analysis on Uranium royalty. And me and Scott, we were texting, back and forth a little bit afterward. He had some rebuttals and some additions to it, which was really good. So and Uranium royalty and UEC were both at the symposium, and so I wanted to get your take on them because they are the only one uranium royalty in the space, correct? Hello everyone, sorry for the break in action, but I want to tell you about the link in my description below. This is to the New Orleans Investment Conference. This conference has been around for years and have brought many people out, such as Milton Friedman, Gerald Ford, Alan Greenspan, and Margaret Thatcher. This conference is put on by Brian Lundeen and his team. Brian is the CEO of Gold Newsletter. This year, they're going to have speakers such as Jim Rickards, George Gammon, Peter Schiff, Rick Rule, Danielle DiMartino Booth, Lynn Alden, and many others. Now, I encourage you to click the link in the description below. You can choose to attend the live event, which I will likely be at, as well as the event that is live streamed. You can support the channel by using my link below, so I encourage you to check that out. Now, let's get back to the interview.
That is correct. They're the only focused royalty company in the uranium space. There's a lot of guys, by the way, including myself personally, who would write royalty checks in the uranium space. But they have so many structural advantages that I think that they will emerge as the only player that matters, focused in the space.
And I heard some comparisons to like Franco Nevada or whatnot, and which I don't know their like origin story of like how they became so dominant in the space. I don't know if they just started early and then obviously made good decisions, management wise, and investment decisions. I assume for them to be in that position.
Let's begin this discussion, Daryl, with a disclaimer. I own Uranium Royalty, so this is not the type of dispassionate analysis that you might get from someone who isn't an owner. I am also personal friends with and a financial backer of this wonderful young entrepreneur, Amir Adnani, who is the sort of driving ego behind Uranium Royalty. In addition to that, I've been a friend of Scott Melby for so long that I did business with his dad before I knew Scott. So let's get the fact that I'm attracted to all of them personally out of the way. I would suggest that Uranium Royalty, based on the package of royalties that it owns today, is fully priced. Partially because they're fairly new and they have uninvested cash. Partially, too, because they have been judicious with their cash, which is to say they haven't bought purported royalties on cat and dog projects from the lame, the halt, and the blind. The company becomes less fully priced if you take into account two structural advantages that don't occur, that you can't see on the balance sheet. The first is the management team that they have access to at Uranium Energy Corp and throughout the budding group of Amir Adnani companies. There's a lot of institutional and intellectual capital available to them that doesn't show up in the balance sheet. It might show up in the income statement as an accumulated deficit, that is, that they've had to pay all these people, but it doesn't show up as an asset on the balance sheet. But investors need to keep in mind that these intangible assets are, in fact, assets in their own right. The second thing that doesn't show up in the balance sheet that sophisticated investors need to talk about is Amir's historic investment in financial public relations. I estimate that in the course of 20 years, young Amir Adnani has caused about $90 million to be spent in public relations and shareholder relations. What that means is that there is a cult of investors around Amir Adnani, many of whom are uranium focused. And Amir in Uranium Royalty will be able to go to market as the uranium market matures and talk to an audience that isn't unfamiliar with him. This investment by all of the companies in Amir's group is really an off-balance sheet asset, which will serve to lower the cost of capital for uranium royalties going forward. Now, investors and speculators who are looking at a uranium trade that will mature before the next long weekend, that is to say, people who believe in the tooth fairy, won't account or accord any value to uranium royalty for intellectual capital or for off-balance sheet assets like the cult following that Amir's companies enjoy. But intelligent investors who understand that expected increases in share price occur as a consequence of application and exploited advantage will understand that they are an important part of securities analysis. I'm sorry for that long-winded answer, but you asked me a question that proved to be too good a teaching lesson to ignore.
Yeah, definitely. So I was recently, Ben, you can chime in whenever. I'm just going to ask this quick question. So I was recently in a rural classroom, and I was learning. I was learning. So I figured out my investment style. I'm a beta investor, and I know Rick is an alpha investor, right? I would assume you're an alpha investor because
Daryl, I'm an old rich man, so I'm both.
so for me, I've done a lot of betting on the sector, and now I'm trying to gain more knowledge on individual companies. But one of the rural classroom episodes you mentioned, and this is when the previous gold bull market, how you begin to see like companies making, unwise, stupid acquisitions and just blowing a lot of money and such. And so right now, what you're saying is that these companies are being very shrewd with their money, and they're not investing in projects that aren't yielding any type of results. And so companies like Uranium Royalty, they're very picky, and rightfully so, with who they invest with, right?
I think that's right. I'm not sure that is going to be ubiquitous in the sector. What happens when a sector performs is the management teams almost always conveniently confuse a bull market with brains. They think the fact that the sector is doing well, and as a consequence their share price is going up, is reflective of their brilliance rather than a market. And they tend to get infected by hubris. And investors in the sector who have had positive experience in the immediate past allow this hubris to generate aggressive and bad decisions. I believe that Amir, despite his fairly young age, is emotionally mature enough, having grown up in a bear market, that if these mistakes occur, they will occur much later in the cycle. And I'm tempted to believe, having watched Amir for 20 years, and also being impressed with the uniformly high quality of people who are in his organization, that he won't be one of those who makes the mistakes. I guarantee you, Daryl, having been through many cycles in my 50 years in natural resources, that the mistakes will be made. I'm just hoping that they be made by management teams that are not fronting companies that I'm backing.
Gotcha. Go ahead, Ben. You can chime in.
Certainly. Well, with the disclaimer that if Rick's the alpha and you're the beta, I must be the omega investor. So there's a disclaimer there, guys. And whilst I fully appreciate the value of certain intangibles as an old-fashioned value investor, how do I value something that's not on the balance sheet? I think Scott may have been a little upset with my analysis that the SG&A expenses were, I believe, over 25% of revenue. And I understand that it's a new company, and this is how, as you mentioned, they need to invest in growth, both in public relations and with their acquisitions.
Let me deal with that right now.
Sure.
You're right. The SG&A expenses in the Adnani Group are they're too high. Amir,
I'm only saying that as I'm also an alumnus of the Rural Classroom, and in the video on the royalties and streaming, you mentioned Franco Nevada as the best in class, and they were down to about 12 basis points worth of as a percentage of the revenue, which is amazing. I don't expect these guys to get there, but am I, as an investor, am I okay with that as long as I see that coming down over time? Do I sit back and keep an eye on it?
If you are a speculator, you try to decide whether or not the return that you're getting is relative to the excess compensation that you're paying. Because in that group, in Amir's group, there is excess compensation, including the compensation taken by Amir himself. By the way, I'm not talking behind his back. I've said this to him personally as a shareholder. I will say that excessive compensation is rampant in the mining business. And at least with Amir, I feel like I'm getting my money's worth. But the first criticism that you level is 100% accurate. I, unfortunately, in my life, have never seen the perfect investment, one that ticks all of my boxes. You know, a company that's selling for half price, where you think that the net asset value is growing at 50% compounded, that's run by a genius, but is so good that it could be run by a gorilla. That's the old sort of Buffett criterion. Sadly, I think that looking for that is analogous to looking for a tooth fairy. I would tell people, too, that if you're a beta investor in natural resources, in uranium in particular, you are not coming as far down the value chain as Uranium Royalty. Uranium Royalty is a growth company. It's a concept. If you're a beta investor in uranium, you are starting your portfolio, pardon the commercial, with the Sprott Physical Uranium Trust. From there, you are going in one of two directions. You are either holding your breath and buying the ETF, buying the market beta represented by the whole industry, or you're buying Cameco and perhaps Cameco adding in Kazatomprom. If you're a beta investor, you're buying the biggest, best, lowest risk parts of the sector, so that when the sector itself floats, you participate in the delta between the sector and the market as a whole. If you're an alpha investor, if you are willing to work harder than your competitors and know more than your competitors, if you're prepared to stomach volatility, not as a risk, but rather as a certainty, then you need to begin to look at smaller companies in terms of durable competitive advantage. And you need to pay attention to information asymmetry. You need to know more about uranium royalty than your competitors do. Now, frankly, that's a really easy challenge, because most speculators, at least those who don't pay attention to the real classroom, have an investment methodology that could be best summed up by got a hunch, bet a bunch, which is why most speculators lose. So you need to decide who you are while you're deciding how you value things. If you're a beta investor, Amir's investment in financial public relations is of no interest to you whatsoever. You're not interested in a microcap's durable competitive advantage, and you're not trying to pick a stock that is going to generate alpha to a sector that's already generating beta. All you're doing is making sure that you participate in a market move while simultaneously lowering your operational risk as much as you can do. And in that sense, uranium royalty isn't an appropriate stock for you.
Mm-hmm. Yeah, so actually, now that you clarified that, I'm more of an alpha than a beta. All right. So
I was gonna hope that you corrected yourself, Daryl, rather than having to have me correct you.
Yeah, I was thinking with beta, because after I watched it, I was like, yeah, I think I'm a beta, because you had mentioned that it's when you buy, companies, well, not even necessarily companies, but you buy the sector expecting it to outperform.
Yep.
And so in alpha, I was thinking like, okay, when you're getting into like the nitty gritty of each company, but now that you frame it in the terms of like, if you're buying like SPUT or, URA or whatnot, you're buying the ETFs, to diversify risk or whatnot. And so I see what you mean now.
Yeah, I would describe you as a contrarian alpha investor. At least that's what I hope you become. I hope you look for sectors that are out of favor. And in addition to trying to outperform the market, you try to outperform the sector too. Understand, Daryl, it's going to provide you in the course of your life with some breathtaking wins and some tooth-shattering losses. And you're going to have to work a lot harder than some of your old lazy competitors that are just interested in beta. It will, however, I think, knowing you now, provide you with an interesting life, which is a wonderful blessing.
Yep. Agreed. So, Ben, you mentioned that you had a couple of companies you wanted to bring by Rick.
Yeah, certainly. You mentioned some tooth-shattering or uncertainty, embracing volatility. It doesn't get much more volatile than when a group of gentlemen decide they're not fans of the current boss, and so they overthrow them. However, crisis and opportunity often coincide. What are your thoughts on the current situation in Niger, Global Atomic, or the country of Niger being responsible for a decent percentage of global uranium supply? And if we're going to dig into the alpha, is there an alpha case to be made for Global Atomic at the moment?
I don't think that Niger will have any impact whatsoever on the uranium market. They produce a little more than 4% of the world's supply of uranium. And uranium turns out to be fungible. If there are diversions of supply from France to China, which doesn't seem unlikely, what will happen is that Australian and Canadian and Kazakh uranium that currently goes to China will go to France. Niger will have no impact on the uranium market except a psychological impact on the uranium market. It would appear that what's happening in Niger is very fluid. And I've tried in the last 2 months to learn more about the domestic politics in Niger, in particular the tribal and clan politics. Much of what happens in politics around the world, I think, goes back to the old Mencken quote about elections being an advanced auction of stolen property. This was, of course, an old-fashioned election that took place with guns. But I think that one of the things that happens in Niger right now is that there's a lot of populist pandering. I don't suspect, actually, I hope I'm wrong, I don't suspect that the coup leaders will be too much more population-centric than the people that they replaced. In the near term, I think it will be very... It will be...
Rick Rule. Rick, how are you doing today?
Albert, sorry about that. I was trying to find your link for your rankings, and then that just popped.
I think that you will see, at least in the near term, an ascendancy of Russian influence in Niger, because I think that the Russians will provide very reliable Russian bodyguards to the new leaders of Niger. And I don't think they're particularly interested in being protected themselves against other African countries, but rather, like their predecessors, protected from their own people. What will happen in Niger in terms of their relationship with foreign investors like GoVX and General Atomic remains to be seen. I am in contact with a Nigerian who I know from a past life, who purports to be in contact with the new government, who suggests that if the new government, if the companies, are respectful of Nigerian interest, that they have nothing to fear, that Niger welcomes foreign investments of all types that reflects the interests of the Nigerian people, whatever that happens to be. I'm a credit analyst. I'm not a political analyst. And what that means actually is that I personally have discontinued rankings on both GoVX and General Atomic because I have no idea how the political dynamic in Niger is going to play out. I was attracted to the grade at General Atomic. I was attracted to the fact that I think the deposit has the ability to grow in size, although they have not paid particular attention to growing the deposit, because I think that they were looking at getting a feasibility study done and hoping to lower their cost of capital before they embarked on exploration. The difficulty is that in the near term, in the 6-month time frame, I think it's going to be difficult for anybody to develop a usable risking function in terms of politics in Niger. And I think that given the opportunities available to me elsewhere in the uranium space, I don't have to. I think the whole sector is going to do well. I don't think I need to take excessive risk to outperform the sector, because I think the sector as a whole is going to benefit me. So I have an excuse, if nothing else, for my laziness.
That's good, man. And this is why the show is called Money Level Show. Like, you have these different levels, and Rick, you have relationship with people, over there, and you're able to get information, just like how you mentioned with Amir. That being able to have access to high quality, information or insider information. I don't even know if that's the right word, but it's very beneficial for the average retail investor. So Global Atomic, Kazatomprom. I started dipping my foot in Kazatomprom, Rick. I mean, you mentioned that was one of your favorites for a while. I don't know if it still is, but for everyone that hasn't watched, if you don't know how to buy Kazatomprom or even Power Metals, I have a video on Interactive Brokers on my channel, tutorial to help you walk you through that process. Also, be sure to go to ruleinvestmentmedia.com to submit your portfolios to Rick to get them ranked, and check out the Rule Classroom. So back to Kazatomprom.
I have a larger position in Kazatomprom than I do in Cameco, although I expect Cameco to outperform Kazatomprom in the near term. I am determinedly a long-term value investor. Many people object to Kazatomprom because they can't spell Kazakhstan and couldn't find it on a map. And when they do find it on a map, they notice it's between Russia and China, and that scares them. Many people, I think, overemphasize political risk because it's easier to be, it's easy to feel it than it is to think about it. I've learned in 50 years of resource investing that there is no such thing as a good jurisdiction. They're all lousy. Some are lousier than others. And while I don't object to putting a political risk discount on a country that you're afraid of, I do object to putting a political risk premium on a country that you're familiar with. I'm going to get a lot of hate for saying this to you, Daryl. But people like me seem to prefer having money stolen from them by white people in English according to the rule of law in Western countries. And they feel bad about having money stolen from them by more informal means in other parts of the world. What I've learned is that when my money is stolen, even by the legislature in English, by old fat white guys, it's just as gone as if it were stolen from me in Congo or Myanmar. And what that means is that the higher quality of Kazatomprom's reserves and resources, the incredible capability of the middle management teams at Kazatomprom, and the free cash flow multiples mean that as a value investor, I have to own it in preference to Cameco, even though Cameco will always enjoy a lower cost of capital, meaning a higher share price relative to net asset value, and even though it is unpolitically challenging to own. Many of your listeners, Daryl, would be ill-advised to own Kazatomprom because it will give them so much psychological dissatisfaction that either they won't be able to continue to own it or it will cause them trauma. I'm going to sound like an old Californian, which I am, but an important part of wealth is enhancing your sense of well-being. And if owning Kazatomprom drives you so crazy when you turn on the evening news that you experience personal trauma in the quest for dividends, sell it. That isn't a problem I face.
Mm-hmm. Yeah. And speaking of news, like, do you in these jurisdictions, do you look for news, like local news or whatever's happening in that nation? I mean, obviously, you want to assess the geopolitical risks, but for me, if I'm owning something that I believe is high quality, I want to avoid I want to avoid the negative press or either Western press on it, so how do you manage that, Rick?
I have, as an example, very large investments in Congo, Democratic Republic of Congo, and it's a mess. I mean, it's not a country, it's a floating abstraction. It's an absolute mess. It's a mess that's getting better. But I don't pay attention particularly to CNBC or ABC or Fox News. People, first of all, that don't, as far as I can tell, have any investments in Congo. I try to, as much as I can, get my news from sources that I have found more reliable. Al Jazeera would be one. But one of the great advantages I have, being 70 years of age and having invested in Congo now since 1996, is that I have a whole bunch of Congolese that I can call. And I'm actively trying to increase my Rolodex with younger people. As you may know, I've joined the board of Students for Liberty now, a worldwide students organization that has had 160,000 young people go through their program. And I'm delighted to say that I now am in contact as a mentor with young African libertarian groups in both Lubumbashi and Goma, two prominent cities in Eastern Congo. And it's interesting to get reports from Congolese who live in the Congo, both about how they feel about national politics, but also how they feel about local circumstance and foreigners. So I try to get a variety of information. And I tend not to think too much about ABC, NBC, CNBC, except in the way that the narrative espoused by them might impact the actions of other investors. In other words, I don't look at it as fact. I don't even look at it as information. I look at it as a way to anticipate public opinion and action.